This is exactly the most important topic in John Murphy's book on technical analysis, so make sure to watch this video carefully. If you ask people who are active in the digital currency market or any financial market, tell me the two most important things in technical analysis, chances are one will be support and resistance, and the other will be the topic of trend lines. That's because with the help of trend lines, you can identify trends, spot breakouts, and execute your trades. Now, in this lesson, we want to talk about trend lines, the do's and don'ts, and the key points you need to know. Look, if we want to talk about trend lines, the first point is that it's not absolutely necessary to always identify a trend line in the market. It's possible that you have a trend, but you can't draw a line for it. So drawing a trend line is not mandatory, but let's suppose you started buying at price point 1 and the price moved up. At point 2, there's a resistance level, and then the price moves down and reaches point 3. Up to this point, you have points 1 and 3. The price then moves up again to point 4, and when it drops again, it reaches point 5. Now you have 3 points, 1, 3, and 5. If you draw a line connecting points 1, 3, and 5, you'll see that a trend line is formed. In fact, a trend line is a line drawn between several points to help you identify the market trend. In uptrends, the trend line is always drawn below the chart, and in downtrends, it's drawn above the chart. This is a very important point. In uptrends, the trend line is below the chart, and in downtrends, it's above the chart. Here, since our trend is upward, meaning we're making higher highs and higher lows, we should draw the trend line underneath. But there are some points about trend lines as written next to this image. To draw a trend line, you don't necessarily need 3 points. With just 2 points, you can draw a trend line. However, what gives your trend line validity and authenticity is the presence of a third point. So with a third point, your trend line becomes valid. Another point is that you should always draw the trend line as accurately as possible between the last 2 points. It might be that you can't draw the trend line precisely between points 3, 4, or other points. Your points might be a bit off, but what's important is that between the last 2 points, your trend line should be drawn as accurately as possible. Why? Because the last points represent the most recent financial information from the market. So if you cannot draw the trend line accurately, do not pay too much attention to the previous points. In other words, it is not necessary to draw the trend line from the very first point all the way to the end. Another point is that the more times the price touches the trend line and the longer the market respects that trend line, the more valid and reliable that trend line becomes. This is exactly what we discussed regarding support and resistance. Also, if you want to draw a trend line, it is better to use the wicks, shadows of the candles. But the key point here is that you should draw the trend line in whatever way gives you the best result. For example, if you see that connecting the candle bodies gives you a better outcome, you can connect the bodies. However, drawing with the wicks is generally better and more standard. Now, if we want to look at a downtrend and draw a trend line, we can see it like this. Again, the price moves downward. As I mentioned before, in a downtrend, you should draw the trend line from the upper points of contact, not from below. Another point here is that the more times the price touches a trend line, after that trend line is broken, the resulting move will be bigger. Suppose here the price moves up and is in an uptrend. When the price reaches 0.6, which is a resistance level, it moves downward, but this time it does not respect our blue trend line. It reaches 0.8, breaks our trend line at 0.7, and then from 0.8 it starts another uptrend. In fact, it is better to say it makes a correction toward the trend line, and then at 0.9 it makes a pullback and the price moves downward. Here we see that because the number of touches to this trend line was high. At points 1, 3, and 5 we had touches. After the trend line was broken at 0.7, the breakout was much stronger and the price moved sharply downward. So imagine the price is moving down. In fact, the trend is now bearish. Why? Because we were able to draw a downtrend line connecting points 1, 3, and 5. When the price moves down again and reaches the support level at 6, then the price moves up, breaks this trend line, and reaches 0.8. After making a pullback to our trend line, the price resumes its upward movement and continues to rise. Now the question that arises here is, how do we know if this breakout is a valid one, and how can we recognize a breakout? For now, the basic points that can be mentioned in this video are that the more candles that form after the breakout and the larger the size of the bodies of these candles, the more we can conclude that the breakout has occurred and is strong, and we should trust it. Now pay attention here. At this point, a red candle has formed, and downward you can see a strong candle where the price has broken the trend line and moved downward. And also, roughly 60% of this candle's body is below the trend line. This is the first sign. But as a secondary sign, you can see that at least 3 more strong candles have also closed below it. Now, they might not all be strong, but just the fact that 3 candles in that time frame have closed below the trend line is enough to convince you to a large extent that the price has broken that level and is moving downward. Well, we have the same thing in relation to a downward trend as well. As you can see here, you have a strong bullish candle, and you can see that about 60% of it is above the trend line. This becomes the first sign. And as you continue, you see that 2 more candles have also closed in green above it. This is another sign. So we have 2 signs. First, that at least 60% of the candle body is above or below the trend line. And the second point is that you should have at least 3 candles after the breakout. This can indicate a trendline breakout. But the next point is about the third trendline breakout. When you see the third trendline breakout, you can be fairly certain that the market trend has likely changed. If we want to look at this schematically, imagine the price is moving here 1, 2, 3, 4, and it reaches 5. A trend line is formed, which we call A. Then the price moves upward towards 6, and here it breaks out and reaches 8, and a new trend line is formed from point 1 to 8. Here we name this trend line B. In the next move, the price comes again and breaks out of the trend line, moving downward. This is the second trend line breakout. First, it broke A, then it broke B. As you can see, the price has reached the support level at 11, and here it starts moving upward again. This time, it comes and breaks trend line C as well. When 3 trend lines are broken, you can most likely conclude that the trend has changed, and along with other factors, you can conclude that our trend has shifted from bullish to bearish. The next topic is about the slope and angle of the trend line. The closer the slope and angle of the trend line is to 45 degrees, or exactly 45 degrees, the more you can conclude that the trend line is healthier and more reliable. The less the angle of the trend line is below 45 degrees, the weaker that trend line is. And the more it exceeds 45 degrees, it indicates emotions in the market, which could then lead to a strong decline if the market is bullish, or a strong rise if the market is bearish. For example, here you see a chart where the price is moving and has created a trend line A. As you can see, when it comes down to reach point 8, then 9, and continues downward, it forms another trend line called B at the bottom. Trend line A, because it is close to a 45-degree angle, is a more reliable and trustworthy trend line, but trend line B is not considered reliable because it has a very small angle and is weak. Another point is that you have no reason to remain loyal to a trend line all the way to the end once you have drawn it. As I explained to you at the beginning of the video, the trend line must constantly be updated between its last 2 contact points. Here, if you pay attention, we have a chart from John Murphy's book where you can see a specific trend line labeled as 1 that has been updated. Another point to note is that while you have a main trend line, you might also have secondary trend lines. For example, in this hypothetical chart that you are looking at, we have a trend line A, which is our main trend line. But while you are looking at trend line A, there are also outer trend lines, which are our secondary trend lines. Now, if we want to observe the concepts we've discussed in this video directly on a chart, here I've opened the Ripple to USDT chart for you. If you look closely, we can see a trend line in this section. Of course, if you open this chart in front of you right now, you can draw many different trend lines. And I definitely encourage you to open various charts after watching this video and start identifying trend lines in the way I'm showing you. Here, if I select this tool and connect this point to here, you can see that I can draw a trend line here. If you pay attention, from the point where the trend line starts, that's one touch, that's two touches, and then when the price breaks this area, after the price breaks here, several candles form and the price moves up. If you notice, after that there's a pullback exactly to the trend line, and from then on the price becomes bullish and moves upward. If I redraw this section, look, I draw a trend line from this point like this, going upward. Now, if you count the number of touches, you'll see there's one touch, two touches, and three touches. Of course, I've shown you the major touches, but there are actually more touches. In the three sections, you can see there are significant touches. After that, in this section, you see a candle closes below the trend line with the entire body of the candle completely below the trend line. After that, several candles close below the trend line. Then there's a pullback here, and then the price starts its downward trend and moves lower. So definitely put various charts in front of you and start drawing trend lines in different time frames. Right now, I've drawn this on the 4-hour time frame. You can open the same chart on the 1-hour time frame and analyze the trend lines there. See which trend lines you can draw on the 1-hour chart here. Be sure to subscribe to the channel and hit the bell button so you don't miss anything.